What's up, traders? Andrew O'Connell here with Pristine Capital. Look at this. We had negative GDP growth in the first quarter of 2022 and the market ripped higher. Let's talk about it. Our box scores for the day. We finished with the S&P 500 up 2.53%. We had our NASDAQ QQQ finishing up 3.55%. IWM small caps were up 1.87%. The dogs of the Dow Jones was up 1.88%. And the ARK Innovation ETF was down 1.39%. You can see all of these indices closed towards the very tip top of their day's range. And we did have a bit of a volatility crush. But what's interesting is that the volatility did not come in nearly as much as I would expect on such a big move higher in the markets. Like, look at this. The NASDAQ was up 3.5%. Pretty much the volatility index of the NASDAQ was down 3.5% as well. Usually it would be much more. Our breadth was overwhelmingly positive throughout the session, and my trend model flipped from a -3 all the way to a +1. So the day started off on this weird note, or to be honest, I wasn't expecting this. All of a sudden at 8:30 a.m., the GDP number comes out negative. And suddenly we're faced with this situation where the US economy, we're facing this inflation problem. And for that reason, the Federal Reserve has to tighten monetary policy. Well, now we have negative GDP growth. There are a lot of economists and a lot of financial talking heads, etc., that have been talking about the potential for a stagflationary environment. And it has always been like, what if? What if, hey, this is our theory, this might happen. Now, getting that negative GDP number, we can no longer deny it. It's literally like a certainty. We are in a stagflationary environment. And what constitutes a recession is 2 consecutive quarters of negative GDP growth. And we just got the first one, so you can really make a case that we are on the way to recession. But look at this. Our Finviz heat map finished out the day bright green. Now, heading into the session, I had a feeling this could go one of 2 ways. The first is, hey, every other time we've had slower growth or negative growth, the Fed is printed. Because we have this high inflation now, the Fed cannot actually ease up on monetary policy, and the market's going to suffer because we're stuck between a rock and a hard place. That would be interpretation number 1. Interpretation number 2 by the market, and this looks like this is the way it was interpreted, was, hey, the GDP growth number came out negative. That means the Fed might be able to ease up on some of the tightening that they're planning on doing. And so for that reason, buy stocks. And another key aspect is value stocks have been outperforming growth for about a year now, ever since February of 2021, so over a year. Take a look at our style factors for today. We had the growth style factor finish up 3.42%, high beta up 3.62%, and momentum up 2.71%. Now, the stage is set. Value's been outperforming growth for a year because the concerns have been all around inflation. Now, suddenly, if we have a growth scare, what should perform better in that kind of environment are companies that are growing. So growth stocks, the mega cap tech companies, these companies that are resilient in the face of a slowing economy or a recession. Now, given how much everyone has gotten blown out of their growth stocks over the past year, there's likely very little positioning within that space. So yeah, take a look at this, for instance, like this IWO. This is the Russell 2000 Growth ETF. Look at how much this thing has gotten blown out over the past year or so. So this really raises the question of, could we get some sort of sustainable rotation back into growth stocks? But let's take a look at what happened during this trading session. There's a lot to cover today. And look at this. So on our weekly chart, this candle is shaping up pretty nicely. You can see it's starting to look like a hammer candle or a reversal candle. But look at what we had here on this 5-minute chart. So look, at 9:30, we had a ton of volatility. We ended up trading down to this daily value area low. And what I did, as soon as I saw that negative GDP number, and given my trend model was at a -3, I sold into the strength this morning. So look at this, around like 9:30, I set market orders, just sell me out of a couple positions. Take a look at what I did here. So I ended up closing out. So I closed out 2 positions. I closed out some QQQ calls for a winner. And I closed out some of these SPY calls for a loser. Basically at 9:30, I was like, you know what? My trend model's at a -3. We just got this bad news. I'm going to close out 2 of these options positions and really just make sure that I'm pretty light and selling into the strength. That being said, a few minutes after the open, or not a few minutes, maybe like an hour into the session, my trend model actually flipped from a -3 to a -1. And in that situation, I want to make sure that, I'm not shorting the market, I'm not doing anything like that. And as I go from a -3 to a -1, it's really about just managing risk on shorts and then potentially adding some long test trades. So I'm not going to lie, that was a little bit of a fake out for me this morning. It was like I closed out some longs on the open, and then the market ended up bottoming and having this trend reversal. Lo and behold, we ended up ripping throughout the session. Normally I'm not looking at the 5-minute chart, but this was just such a wild day of price action. We pulled back into this daily point of control and then off to the races. And so what I did as the session went on, my trend model actually flipped from a -1 to a +1. So I ended up closing out my SPY put butterfly, closed this one out for a nice winner, maybe like a 50-something% winner. And I put getting a bit longer by taking a short off. Because this all happened so quickly. Like, oh my gosh, we're going from, economic malaise, market selling off in the morning to just like the market absolutely ripping. Took that position off. I got long some ARK, May 20th, 49 spot, 2-2 calls. And I did add one common stock trade in Upstart. So this one got long at $78.88. And this one, take a look at Upstart. I noticed that Lending Club had some good earnings, and that could follow through to Upstart. Take a look here. Upstart ended up having a really good day. This stock has a high short interest. And again, if the market rotates into some growth stocks, this one could really work out very well for a nice swing trade. Yeah, basically closed out some positions in the morning. Not gonna lie, did get a little bit faked out, but I want to make sure that I'm following my system. When my trend model's at a +1, can't be stubborn, can't resist the trend change, etc. But what's interesting is, that being said, like the decisions that I made today, just doing the best with the information that I had, we're in this weird spot. We got Apple earnings after the bell, and we also got Amazon. So Amazon's down 9.1%. Let's actually see where it's at right now. Took a spill after reporting earnings. They only had, I believe it was like 7% revenue growth for this first quarter. And they're projecting like 3% for the next quarter. So really, like, Amazon's a good barometer for the economy. Amazon, it's not really growing that fast anymore. So look at this. We're trading at 26.31 after hours. We're off about 9%. And then let's look at Apple. Apple makes up over 6% of the S&P 500. Apple basically unchanged. It looks like we're down maybe like 2% in the after hours, if that. That's essentially like a big win for the market makers. Nothing really crazy at all. But look at this. The S&P 500, this was like very weird because my trend model flipped, but it flipped pretty much right as we're approaching this downward trend line. So this is a pretty ambiguous spot for the market. To be honest, if the market starts rallying off of this negative GDP number, I want to make sure I'm not fading it, because I think there's going to be a lot of galaxy brain hedge fund types that do try to fade it because they don't understand it. They just think they're smarter than the market. I want to make sure that that is not me, but I have to acknowledge that heading into tomorrow, what happens if we fail here? Then my trend model is likely going to flip right back to negative, and we're right back where we started in this weak market. I did put on some test trades to the long side. I added my Upstart that I showed you, and I added my ARK Innovation ETF. The reason why I added the ARK, take a look at this. So I figured, hey, if growth stocks catch a bid, if there's some rotation in there, no one's positioned in growth stocks. These innovative tech companies, they could catch a bid. Literally, Kathy Wood, she was long Teladoc today, and Teladoc got absolutely destroyed. And it's just been like everyone making fun of Kathy Wood like all day. But this Teladoc stock got bought up, throughout the entire session. It's like, I'm looking at this, I'm like, if you were going to dump Kathy Wood's fund, today was like the perfect day to do it. And the fund was barely even trading down, basically put in a hammer candle on high volume. No one's positioned here. This could be a great asset if we get a balance in these growth stocks. So I added this, but that being said, given the uncertainty, because that's really what it is. This is a crazy market environment. If those test trades that I entered today don't work and I immediately go red on them, let's say tomorrow, like the market just spills right back over, who knows? I want to make sure the key is that I do not add to my exposures if my test trades don't work. If my test trades do start working and the trend actually takes hold, and before we know it, we're breaking above this downward trend line, that's where I want to lean further into this market and look for further setups and apply that progressive exposure. So that's the way that I tend to go about it, where it's like, you follow your process, you wade in, you don't have to go all in or all out, you don't have to be super emotional, and yeah, you try things out and you make sure that your risk is defined to the downside. If you do that, even if the market just like flips right around, that's okay. You'll take some paper cut losses, it's fine, and then you move on and you make sure that you realign with the trend. But if not, this is how you can sort of work your way into the market. Today overall was definitely a more challenging trading day for me. So yeah, it's all about really just, doing what's in your control, like just focusing on that and not getting too emotional. Like definitely there's a lot of newer people out there that the emotions will just take hold. They're very easily excited. You want to make sure that when you're following your trading plan, it's really just business as usual. But at the end of the day, it's all about just what's my process, how do I follow it, and how do I make sure that I'm set up for success in the next trading day. So with that being said, that about does it for today's market recap video. Hope you all had a great trading session today, and I'll see you all tomorrow.